You have just tuned into the Silver Stacking podcast featuring yours truly and the man, the myth, the legendary Andy Scheckman, which is the CEO of Miles Franklin. Grab some popcorn because this is going to be a good episode. So make sure you click subscribe and click the bell. We'll be covering several different topics from silver stacking to geopolitics and everything in between. If you wanted a safe, reliable, cheap place to purchase silver or gold or platinum, Miles Franklin's the best. You can call me 330-485-6172 or email me slayer@milesfranklin.com. We have kilo bars, $1.79 over spot, folks. Buffalo rounds, $2.35. I mean, these prices you can't beat. 10-ounce bars, the lowest $2.25. 90% silver, I think it's like $2.65 right now. You can't beat these prices. Plus, you build a relationship with me and it'll go a long way. So yeah, Andy, it's good to see you, my man. How you doing?
I'm
What's
good,
up?
brother. It's good to see you too, dude. And thanks for having me, and I appreciate it. Crazy to think that the year's over half over, and we got
Yeah.
this election coming up in the debate tomorrow night. Things are moving a little bit faster than I'm used to, and it seems the last several years time's been moving fast, but with all the developments we keep seeing, man, it just seems that the world is moving faster right now. As silly as that sounds, it's just the way it feels. You wake up and it's already July. How'd that happen? Where did all the time go? But as always, man, it's good to be here with you, and thanks for having me.
The I guess most worrying part about it already being over half through the year is what's happening, and this is kind of where I wanted to take our conversation from the BRICS meeting in October, and then the November election. As we inch closer towards those dates, I feel like silver is going to be put in a very interesting situation. Not just silver, all assets, but I wanted to talk more on the BRICS meeting, but also, what do you think is going to happen, or how is silver's price going to be affected by the BRICS meeting and the November election?
Well, I mean, in general, I think all things not dollar will benefit from this continued de-dollarization and from this continued move away from accepting the dollar as the sole settlement currency for everything. One of the things that we continue to witness are bilateral deals that are being struck which usurp the dollar. And it's not how does gold and silver do in particular. I mean, over time, what I really think is what's happening is that the dollar is losing ground, losing value, losing credibility, and therefore, in the face of a falling dollar over time, ultimately, I see gold and silver going markedly higher. But what we've been seeing really is massive deliveries coming off of all of the exchanges using the Western suppression to run cover for it. And we talked at length about what's been going on in Shanghai and the LBMA, where the LBMA is trading upwards ends of 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, nearly all of it naked or paper contracts that were created out of nothing, just the ability to control the price. And that worked for a very long time, for years, decades, because the countries around the world were those that were sophisticated and coordinated and wealthy were on the side of the West. Those in the global southern hemisphere, or these other countries that we now call the BRICS, largely were not coordinated, sophisticated, wealthy enough, or had any desire to stand for delivery. These countries, if anything, were worried about their own affairs, and most of these countries would invest in the U.S. infrastructure because of its stability and its potential in stocks and bonds and real estate. And look, let's face it, this country still is the greatest in the world, but the opportunities for investment that we saw in go back 40 years to 1982, and you see interest rates that have fallen at a 45-degree angle for the whole way down. Falling interest rates then is the opposite of that, would be rising asset prices, stocks, bonds, and real estate. In the face of falling interest rates, it became a wonderful place to invest and to park money. Safe, prosperous, opportunity laden, rule of law, all of the things that you would want seem to have kind of gone by the wayside, or are changing dramatically in a rising interest rate environment. And just as bullish as that environment of falling interest rates and easy money has been for 40 years, the opposite will hold true in a contraction of credit and rising interest rates, which I believe will happen as banks continue to get beat up in commercial real estate, certainly being a good example I talk about all the time. The former One AT&T Center in St. Louis, 43-story tall building, third or fourth largest building in St. Louis, sold for $205 million in 2006 and just sold for $3.7 million. $3.7 million. And then I just got one just now from the Pickaxe Silver Academy, John Little, and he's great. He's a great researcher. And here he says, this is one of the most insane deals we've seen. I just got this 10 minutes ago. An office tower in San Francisco's mid-market area shockingly sold for 90% less than what it is traded for. The previous owner paid $62 million in 2018 for the 90,000 square foot building. It was recently acquired by Starwood affiliate for $6.5 million or $72 per square foot. And 995 Market Street is the address. So you think about that. Just a few years ago, it sold for 62 million, and now it just sold for 6.5 million. And this is emblematic of the problem that is no longer the opportunity. And so I think you move away from traditional assets, stocks, bonds, real estate, in a country that is choosing inflation as their way out, that has great instability in the bond market and has chosen to weaponize said bond market, coupled with all of the things that are happening in this country. You look around and you don't feel safe walking downtown in any major city at night by yourself. I used to live in downtown Minneapolis right out of college, and I would walk home from the bars by myself, 8, 10 blocks without a second thought. And I don't think it would be wise to do that now. And just about any major city, the lawlessness, the open borders, the election issues, the judicial department issues, all the things that we've talked about ad nauseum on your show for a long time, is coming home to roost. And what I guess what I mean by that is the opportunities that were found in investing in traditional assets in the U.S. are changing now and moving more towards commodities and repatriation, removal of counterparty risk. You look to the Bank of India as an example, who purchased 24 tons of gold, if we believe those numbers, probably more than that, but 24 tons of gold in just the first 4 months of this year. That's 1.5 times more than they did in all of 2023. They bought more silver in Q1 2024 than in all of 2023. They've bought nearly 700 million ounces of silver in the last 3 years. That's 12 times more than is in the COMEX registered category. But equally as interesting is that the Bank of India moved over 100 tons of its own gold from the UK, the Bank of England, to India for the first time since 1991, and they hold almost all of their own gold in their own vaults right now. That's an indictment of the system. The indictment is all of these nations used to leave all of their gold either in the Bank of England, which would give them immediate access to the LBMA, or just like we saw 2 weeks ago, Nigeria, South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia all brought their gold home from the New York Fed, which gives immediate access to the COMEX. And let's not forget, in 2017, we saw the same thing. The Bundesbank from Germany, Bank of Austria, Turkey, Hungary, Poland, Czech National Bank, Dutch National Bank, they all brought all their gold home from the New York Fed. And all of these entities have been buying massive amounts of gold and silver, to where the first quarter of 2024 was the largest purchasing first quarter ever by central banks, only surpassing first quarter 2023. So yeah, we are seeing a drive to accumulate commodities and repatriate them in the face of greater risk and declining desire to own US-based assets. So what do I think will happen? I think it will only bring much, much higher prices for the metals. But let's talk about your specific question in another way as well, and that is the question about the BRICS. There were 2 meetings that we saw just over the last few weeks in Russia. We talked a lot about the ultimate de-dollarization and this common settlement currency, and we talked about the 200 meetings in Russia that lead up to the big BRICS meeting in October. Well, There were two that I want to focus on. The first one happened 2 weeks ago, and it coincided with the G7 meeting. And right around the time that Saudi Arabia did not re-up their exclusivity deal with the U.S. and the petrodollar deal that made such big headlines, the crown prince of Saudi Arabia was invited to the G7 meeting in Italy, and he turned it down. Sorry, I got busier things to do and other plans. But he sent his delegates to the meeting in Novigrad the same week, where 21,000 people attended from 139 nations, where $78 billion in bilateral deals were signed on the sidelines, meaning we trade in each other's currencies, not in dollars, where 59 nations, it was revealed, plan to join the BRICS. 59, that's on top of the 10 we already have. You're talking the majority of human population, larger swath of GDP, of commodities, of military might, all of the things that are needed to build a robust economy and a robust civilization is found in these countries. And, you had a discussion or a comment by Putin saying that the infrastructure, the BRICS payments infrastructure, is actively being pursued through the new development bank, which is I'm going to focus on here in 1 second. And he also said trade logistics and sea routes are a major focus for cooperation. Well, that's no doubt. You look at all these countries that they're bringing into the fold, into the BRICS, and they're either very resource rich and or are strategically located in sea routes or trade logistics. They all dovetail into the Belt Road Initiative and the BRICS and the North-South Corridor and all of these trade routes, which will be permission based only. You look at the Belt Road Initiative, this massive infrastructure of bridges, roads, and railways and maritime channels. It will only be patrolled by military and commerce. It's not for people to go on a sightseeing cruise in a convertible. It is a series of routes for commerce and trade and be patrolled by military. So it's the real deal. But we go back a week before to the meeting in St. Petersburg, the St. Petersburg International Economic Forum, where Putin gave a speech and he said the Bretton Woods monetary system is dead and gone. And the current one is based on the confidence in the United States economy, period. And this is a big deal. But the things that they talked about were even a bigger deal. There was a meeting between he and the head of the BRICS New Development Bank, and she came out and publicly admitted that this is the case, and we have decided and agreed upon a new settlement currency, in essence. It's called the unit. And Sergei Glaziev was there as well. And Sergei Glaziev was the architect of this whole deal. And it's been 3 years now that he has been talking about a basket of local currencies mixed with a basket of commodities to be this new settlement currency, if you will. And it's something to ponder because, what would a basket of commodities look like? What commodities are we talking? Wheat? Are we talking oil? What are we talking? Now, remember, gold was reclassified as the only other tier one asset in the world, right, by the BIS. And the central banks are buying gold off the chain, and they're at the same time repatriating it all, right? Well, it's been determined that this new currency, which they call the unit, it's the name of it, will be a basket of 60% currency of the BRICS plus nations and 40% gold, period. That is what they just came out and said. And the the head of the New Development Bank said this, echoed it. And so they also mentioned Project M-Bridge. Project M-Bridge is the deal that we've talked about at length for the last couple of years. And it is a project that was designed now for a few years as a collaboration between China, Hong Kong, Thailand, and the United Arab Emirates. They developed this cross-border payment system. And I guess I would say that commodities are being remonetized. And I've said that for a while now, where, gold is more valuable than the dollars that purchase it, as is oil, as is silver. And all these commodities, you look at the deal as oil as an example. The largest airport in Iran is being modernized by China. They won the contract. They're paying for it in oil. It's like $3 billion in oil. And the first two trades, the test trades that were done on M-Bridge, were done in 2023. The first one was for oil. The second one was for gold, with United Arab Emirates and China using central bank digital currency, the digital yuan, if you will, purchasing it over Project M-Bridge, which is a cross-border digital payment system that sidesteps the SWIFT system, which is what the West uses to impose sanctions. So she said, she being the head of the BRICS New Development Bank, and Putin said that Project Enbridge would be key in all of this, whereby these countries will be able to retain their autonomy and have their own central bank digital currencies in doing these bilateral deals, but everything will be settled in the new settlement currency, the unit. 40% gold, 60% basket of BRICS plus nations. It's getting real. And yet the West does zero job of reporting any of this stuff. But you can go right to, there are several places that will talk about this, including the Chinese website, their own government website, which talks 50-page report on Enbridge that talks about this. Or go to the BRICS New Development Bank and Google the unit. And this is happening and it's real. And yet the people in this country have no idea what's coming. And so when you get suppression in paper price, that's all the public sees. It's just an incentive for all of these countries to continue to stockpile commodities using the suppression of the Western markets, throw people off the scent by shorting the paper price and gobble everything up that's not nailed down. So ultimately, to answer your question in a very roundabout way, ultimately the price goes higher than anyone thinks possible because it will be at the expense of a dollar that is globally being usurped and forsaken little by little by little. This is a big deal. You can't just, this instant gratification that everyone is enamored with in this country, Bitcoin, Nvidia,
Right.
Apple, that's the wrong way to look at things like this, which move slowly and
Yeah.
methodically. And the little by little, the naysayers are all over it. They disregard it because it takes so long and it's a nothing burger, right? But look at all the things that are happening. And if you look closely enough, the problem is you have to look deep. You can't look at the mainstream media. You don't get any of this information.
Right.
And so that's why I would say the little by little by little is very significant and it is happening. So yeah, it'll have profound effects to answer your question, very profound effects. And you can see the foundations being laid right now.
You want to, this is the most clear, direct, easy way to shut down any naysayer. I'm a realist, right? I just try to look at things realistically. All the other nonsense just makes it, just confusing. People will overcomplicate things. There's either two outcomes. Either the dollar will survive. The only way silver and gold won't do much is if the dollar survives over the next however many years and strengthens. And if that doesn't happen, silver is going to come out on top. Now, the possibility of the dollar strengthening and just randomly getting stronger, no, that's not going to happen. So it's almost a guarantee. Like it's right, is plain as day. It's either the dollar or silver. We all know the dollar is inevitably going to collapse. So what does that mean? I mean that's as it's as simple as that. I mean, if you really want to look at it, like, is there another situation where they could exist together? Or I mean, I just don't see
Not
the
in the
dollar.
absence of confidence. And that's the thing. If you have a system that is backed solely on confidence, you're right.
Yeah,
We're told that the Fed wants to maintain 2% inflation. That they're at 3.5%, if you believe it. If you look at shadow stats, we're at 11%. I wish it was only 3.5% inflation. It's nowhere near it. But why not have negative inflation? The lower the inflation, the better the standard of living. So even at 2 or 3% inflation, your currency is losing value every single year. And in an asset like silver, which is declining in nature, and growing in industrial uses, yeah, ultimately you're right. What adds fuel to this fire is the weaponization of the treasury market, where we have confiscated 5 billion in Russian assets and using it to buy munitions to give to the country that is fighting a war against the country we took it
yeah.
from. That's a line you can't cross. So when you do, the consequences will be profound. And I think we are witnessing a period of time where the dollar and the treasury market are no longer viewed as safe places to put your money by the big players in the world who have funded our exorbitant, extravagant standard of living for all of these years. So it will ultimately come at the expense of the dollar. And therefore, when you look at things that are measured opposite the dollar, like commodities, this is why Zoltan Pozar says Bretton Woods 3 is a system based on commodities, and silver, probably the most undervalued asset of them all. But when you think about how big of a deal this is, what the United States has represented for 100 years, um, what does it mean if this happens? It's a profound change, and this will not be something that is smooth and easy and without all sorts of drama and events. That's an easy way of a nice way of putting it. So yeah, look, what betrays silver's price is the acquisition by the biggest players in the world who know the playbook and the repatriation of it. What betrays the price of silver is the LBMA trading, in essence, almost 3 billion ounces of it per day. There's not even that much. If they needed to find that much all over the world, they couldn't find it. And yet they're trading that every single day. This distortion in price discovery is creating maybe distortions in the way people look at the world.
Yeah. Price. Price is the greatest tool of misdirection. I wanted
Yeah,
to
someone
stop
once
real
said
quick.
that.
Yeah, yeah, I love that. I wanted to stop real quick. You mentioned the G7 a lot. A lot of people probably don't even know it. So there's the BRICS, which is Brazil, Russia, India, China, so that. G7's us, like United States, France, Italy, Germany, I think the UK. Can you speak more on like the G7 side of things for people who might not know or even didn't even know that that existed or what that means?
Well, yeah, I mean the G7 is just kind of the status quo. The G7 is U.S., Canada, France, Germany, Italy, Japan, and the UK. This is the Western hegemony. This is the status quo. These are the countries that, are imposing sanctions. These are the countries that are part of, this united front, if you will, against the global South. These are the countries that are the ones that are being, I think, pushed back against. The G7 is the old guard, and these are the industrialized nations that represent the status quo and have ruled the roost for a very, very long time. And in particular, when you talk about the European countries, France and Germany and Italy and the UK, and then of course the United States, and throw in Canada and Japan into the mix, you have these countries that I think have inspired an awful lot of resentment by much of the world. And you look at for example, the EU, European Union. They too are not immune to any of these problems. There's only 5 billion in Russian assets in the U.S. There's about 300 billion in Russian assets in the United Kingdom, and in particular the European Union. And they have voted to not confiscate that money outright, but to confiscate the interest on that money, again, to use to fund the Ukrainian war for munitions and whatnot. It's the same thing. They're stealing those assets, throw off interest. They're taking that interest backed by the Russian, bonds, or the bonds that the Russians own, and they're using it instead of giving it to the Russians because it's theirs. They're taking it and using it to buy weapons to shoot at the Russians. These are you can't do this. When you cross these lines of outright thievery, when the world looks at the West, and in particular, the old European countries in the United States, as being wholly hypocritical, it creates a rallying cry that not only brings more countries into the fold, i.e., 59 countries have said they're joining the BRICS, according to this last meeting last week, but it also, gives reason to no longer trust the currencies or the securities, the bonds that these countries sell. This is a big deal. It's a big problem. So you got the G7 as the old guard, and you have the new BRICS countries in the southern hemisphere that represent, a desire to see a new system, one that is not dominated by the United States and the West, but one that is more based upon mutual desire to work with one another in a multipolar world rather than a unipolar world. In other words, one point of money, of wealth, of rules, into one that is based upon mutual cooperation and these bilateral deals that are now being struck. It's a big deal, and it's because of the actions of the G7 in particular.
I started playing chess recently, and it genuinely seems like they are playing chess while we are playing checkers. Like every single thing we do, it just seems counterproductive and actually dangerous. Like we're poking the bear, I don't see how this is going to end and positively. This is the thing that I also wanted to reiterate about the dollars. Yeah, like you said, the dollar's only as strong as people think it is. So if people start to think the dollar's not strong, it literally isn't strong. So not only did COVID expose how broke the United States is, now we're also, pushing, going into this direction. So I don't see how someone could put their money into anything that's pegged to the dollar, because once the dollar falls, everything pegged to the dollar is going to go down with it, right? And that kind of goes into another topic I wanted to talk about, was like the PSLV, SLV versus like physical. Because someone emailed me saying, they have both, and they were wondering my thoughts on what they should focus more. And I was just saying, look, and mistake me if I'm wrong, but or correct me if I'm wrong, but those are two completely different markets. In my opinion, like the SLV, PSLV, that is more looked at as like a profiting type of stock market type of thing, whereas physical gold and silver is to preserve your wealth. It's like, like I don't look at those two things as the same. They're kind of contradictory, because the whole point of investing in the physical gold and silvers, it's intrinsic. You could, if you can't hold it, you don't own it, right? You have it in your bare hands. Whereas a PSLV, that's more of like a stock, in my opinion. I don't look at those two things as the same category, even though
Well,
some could
you
say
don't, because this has been your focus, but people who don't get it would think when their advisor says to them, "Yeah, you have exposure to metal now in SLV or PSLV." Let's kind of break it down a little bit. First and foremost, PSLV and SLV are very different. Um, PSLV is what's called a closed-end fund, and SLV is what's called an ETF or a proxy, if you will. The closed-end fund means it's more like a stock and less like an ETF. You're eligible for capital gains instead of the collectible rate that you are in SLV. But more importantly, it is, if I'm going to buy anything paper, I would buy PSLV. It's administered by Sprott. The metal is held at the Royal Canadian Mint, supposedly backing all of the shares that are issued. And redemption is allowed, but the redemption is in 10 1,000 ounce silver bars minimum. And so you're taking possession of 10,000 ounces and 1,000 ounce bars that are really, it's not a practical way to hold it. SLV is probably the worst product ever made, in my opinion. And along with GLD, not only is it administered by JP Morgan and BlackRock, JP Morgan, who paid a $920 million fine to the Justice Department for manipulating silver, is still allowed to run the world's largest silver trust in SLV. And, brokers who used to be called stockbrokers, now they're money managers. And stockbrokers made money on every trade that you made. Now money managers keeping your money under their umbrella of management is priority number one, because they make a percentage of it. So when someone comes to them and says, "I want some gold and silver in my possession," they'll say, "Listen, the storage and the risk and all that stuff, you'll be better off just buying these ETFs and PSLV and GLD
mm,
and their Sprott's gold trust is PHYS. You should own this stuff, and now you'll have the
that
exposure to the metal without the risk."
That's
Um,
why I always see these stupid ass articles of people trying to convince the reader of why it's better. And I always like, there's like an ulterior motive here. Like
Sure
clearly
it is.
what they're saying, they don't mean. There's a reason why they're pushing you to go this route, because that route doesn't make sense. Now, okay, you just broke it down brilliantly. Okay.
Well, but it's deeper than that, and I think there's maybe even a deeper ulterior motive. Maybe the government at some point figured that the road that they were heading down was unsustainable, that ultimately the math breaks the system. Mathematics is the purest of all the sciences, and it always works out. And you get to a point where you're at a crossroads. So they know there would be a much bigger drive into precious metals. So they develop, let's say, GLD and SLV. GLD is held by HSBC Bank, probably paid more fines for market violations and trading and drug money with the South American drug dealers and LIBOR and all of these things. And JP Morgan, I mean, need I say more, $920 million fine for manipulating the metals market. yet they're running the world's largest silver trust. It's the largest stockpile of silver in the world and the fourth largest stockpile of gold. If they ever needed to confiscate gold and silver again, going door to door to people like you and I, and many of which who believe in the Second Amendment, is not practical. The amount of patriotism that's out there is not what it once was. So instead, you have all of this metal held in a central location by the cartel criminal banks who manipulate the market anyway. So they could come in on a Friday night, take SLV and have the largest stockpile of silver in the world, take GLD, have the fourth largest stockpile or fifth largest stockpile of gold in the world, and look the world in the face and say, what? We didn't do anything. We didn't confiscate gold the way Roosevelt did. We didn't activate eminent
Right.
domain. We closed these two accounts. You can still own it if you want
And
physically, but we just closed these, and all the money that you had in those accounts are now in your money market as
right,
of
it's
Monday morning.
justified.
It's
Yeah,
justified, and they don't break any laws or infringe
yeah,
civil liberties. But you know, the whole thing of it is that these advisors who keep you under management by, that's how they make their money. If you take $1 million out to buy gold and silver, that's typically that's going to cost them $10,000 at 1%. That's 10 grand you just took off their plate. And so that's how these advisors make money, and they're incentivized to tell people, no, don't do that, buy this. If I had to buy a paper product, without question, it would be PSLV or PHYS, which are the closed-end funds run by a reputable man, or he's not really involved anymore. Sprott, it's a publicly traded company, but never heard anything bad about it. GLD and SLV are two of the worst products I've ever seen in my life. And if you don't believe me, open up the prospectus. In GLD, the pages are 6 through 12. I don't know in SLV, but it's called risk factors in the prospectus. Read the risk factors, and if you don't sell it and immediately after you read it, slowly, maybe read it twice, I think I'd be shocked. You'll find the like in GLD, it says things like the custodian, which would be JP Morgan, reserves the right to employ sub-custodians. Their JP Morgan or the custodian it's not permitted for the custodian to view the premises, the storage facilities of the sub-custodians, nor are they responsible for the errors and or omissions of the sub-custodians. And if indeed the gold bars do not meet London good delivery standards, like a 400-ounce good bar, it is not the fault of the custodian, it's of the sub-custodian. And if fraud is detected within the GLD, then the account is frozen, an investigation ensues, and upon resolution, you will be paid the share price at the day the investigation was initiated or the fraud was discovered. So there could be fraud tomorrow, and then they freeze the market, and then gold goes up $10,000 in the next 2 years, and you get paid at the value of the day that the fraud was discovered. There's a million things that are in these accounts that are just designed completely and totally. If those bars don't meet London good delivery standards, if they're lead bars painted gold, it's not the fault of the custodian. So this prospectus is fugazi, and it's a horrible way to own precious metals, because you really can't take possession of it unless you are in SLV and GLD, unless you are what's called a authorized participant, and the baskets that they fund are, millions and millions and millions and millions and millions of dollars each. So it's designed for the big money, the commercial banks and whatnot, to pull stuff out, but for you and I, the peasants, ain't gonna happen. And we're talked into owning it because it's an easier way, cleaner way of owning metals, so we're told. But really, it's just a derivative of the real thing. I say to people, if the shit hits the fan, do you want boxes of Frosted Flakes or stock in Kellogg's? So, and besides, the only
ooh,
real
I like
you
that.
you make money on PSLV or SLV or PHYS or GLD by the price of gold and silver going higher. You don't make it based upon supply demand. And that's another example. So if we look at what we saw over the last 4 years, where premiums were crazy high, like Silver Eagles, $11, $12 premium bid, will buy them from you. You'll never get that with the ETFs. They're just measuring spot, but it doesn't take into account the premium associated with owning the physical. There are a lot of reasons to not own it, and I wouldn't own those to save my life. I think if I had to, it would be PHYS and PSLV. I would never own GLD and SLV. They are two of the worst products ever created. and in my opinion, are the tools or the vehicles of confiscation should it ever happen, because going door to door would not be smart these days. But having the largest stockpile of silver and the fourth or fifth largest stockpile of gold held by the criminal cartel banks in vaults with a pink bow wrapped around it would certainly be a lot easier and give the government the ability to have their cake and eat it too.
Wow, I really am glad that you just mentioned all that, because I just learned so much. Like, there's so many things you just mentioned that I think are extremely important. And I've seen that so many times. I'll be covering an article where it just seems like they're either misleading the readers or purposely, shifting the narrative into something that just you could just tell they're not being truthful. And I try to rip those articles apart because they clearly, have some type of motive behind what they're saying. And then if someone's not who doesn't watch my channel reads that, they'll believe that person and they'll start forming their own opinions off of someone who is just completely misleading them. So,
Well, it's
it
interesting too. In the last couple of weeks, I have had three requests from CBS News to talk about physical gold. Yesterday, they sent me one from Market Watch, and it was just two questions I wrote on, and one was, well, actually, let me see what it was. I'll tell you exactly. It was if you're buying physical 1 ounce gold bars for the first time, what are some of your tips for what you do before jumping into the purchase? Question number two: how can a beginner investor determine if buying physical gold is right for them? And they just sent me another one today. Three questions. One, do you think the price of gold has peaked for 2024? Or do you think there's potential room for growth later this year? What should new investors know when trying to determine if gold's price will rise through 2024? Is gold a good or bad investment right now, or why? And so I don't know if they are starting to acquiesce to the reality or not. But I find it interesting. In all the years I've done this, these companies didn't come calling or asking any questions at all, and now you're seeing there is an interest in it at least, and maybe that's a step in the right direction. But yeah, most of these financial advisors, because of the way the system is set up, they learn more and more about less and less till they know everything about nothing, and they're focusing singularly upon a strategy that doesn't offer any ability to get free from this financial matrix, which I think the removal of counterparty risk and getting out of the system is a huge benefit that's not talked about enough. um, that's that to me is one of the real benefits of holding metal in your own possession, and which in and of itself is better than GLD and SLV.
You were on Kitco News twice in the last couple of weeks, right? With Michelle McCory,
Well,
two
we
times, or
originally
was
had a 45-minute interview, and we ended up talking for almost 2 hours. So she broke it into two interviews. So it
okay,
was one long day done
okay,
that she broke up into two interviews.
okay. So many people say that you are everywhere on YouTube now with shorts. They say there's now channels that are taking clips of you and putting like an AI voice behind it, and just like you're just like flooding YouTube's algorithm, which is a good thing. Some people don't like it because they're like, they think it's like, I don't know. I think it's good. The more you're out there and the more exposure you're getting and the, stuff you're
I
pushing.
can't control
Yeah.
that because there's way more videos out there than I've ever done.
Yeah.
And it's those people that are doing that and monetizing their channels.
Yeah. Yeah. By the way,
I'm sure YouTube knows who I am by now.
oh yeah. This is our 32nd episode. Isn't that crazy? We've done
Time flies,
32.
man, and
Yeah.
it's been a complete joy getting to know you. I consider you a friend, and there are very few people in this industry that I hold in the same respect and regard as you. And it's an honor to come on your
Yeah.
show. But oftentimes, even the stuff you and I do, they will crop that, put an AI voice behind it,
Yeah.
and different music and whatnot, and bang, they got a they
Right.
monetize the channel. They're getting click
Yeah.
money.
Yeah. I mean, you are extremely respected though. Like the guy I was talking to yesterday, how did he say? He's like, I don't think there's a he was like he was talking about you and just how much you've done for the precious metals community. He's like, Andy doesn't have a fake bone in his body. He's like, that man is the truth. And I agree. It's really cool to be able to talk with you on a weekly basis and hear your
Pleasure is
perspective.
mine, man. I
Yeah.
appreciate that. Look, I'm not, I'm not the smartest guy in the room. I'm not Peter Schiff. What I try to come across as being sincere and honest.
Yeah.
And,
Yeah.
we've talked about that before. It's a big deal for me to let people know that running a successful business and doing right by people doesn't have to be mutually exclusive of one another.
Yeah.
And YouTube's changed my life, no question about it. But um, I think being genuine and honest is something. It's the Midwestern upbringing, I guess. The Midwestern, living in Minnesota my whole life. You do right. You hold the door for ladies. You say thank you, yes sir, yes ma'am. You do right, and I think that goes a long way nowadays because you know it seems a lot of these things that seem second nature to me are kind of gone, and I think it bothers people that there's just this lack of decorum, of respect, of integrity, of honesty. It's what I try to bring across, and I study a lot and I research a lot. So it's not that I'm the smartest person. I work hard. I work harder than most, and you can outwork someone just by and having good intentions. So I appreciate you saying
Mm.
all those things, man, and I know how hard you work, and I think that resonates with people as well. So effort and integrity and honesty go a long way, oftentimes even more so than talent.
Yeah. Yeah. Wow. Well, we've been going for like 45 minutes, maybe like 40 minutes. So, we could start to wrap it up if there was anything else. I did want to actually talk real quick about silver's dip. I think it's like 28.79 or something last time I checked. Uh, what I think that right now genuinely might be one of the last times to get silver for under $30, um, for several different reasons. Most importantly is that we broke past the 12-year highs of 30, and that resistance barrier that we kept bouncing below finally broke, so it's easier to go higher now and hold higher around 30, where before if it was going to touch 30 it would shoot back down to like 25 or whatever. But also because, like we mentioned, the second half of the year, we're approaching the BRICS meeting in November, or I mean in October, then November election, and we have like on Friday we have the huge FOMC meeting, which that itself, in the next couple of days could spark a lot of controversy, like it always does, and prices go extremely volatile. So I think right now might be a very good opportunity to get in while it's still cheap. What do you think about that?
I agree. And you look at what silver is doing in Shanghai right now, it's over $33 an ounce. What is the real price of silver? I agree. And I think that it's one of these deals where these round numbers are very, very important to the cartel. But more importantly, when you see the bleed down in inventory off of Shanghai, we've talked about that before, how all the central or the commercial bankers went to the Shanghai Metals Exchange for 4 weeks in a row. And all of a sudden, not only with the largest short position they may have ever had behind them, and when you realize that all of these traders who are buying and trading all of these commercial banks on the LBMA, where they're trading almost 3 billion ounces of silver per day, I think they're trapped, and they went there asking for help. So the system doesn't blow up, and at what cost, of course. But I agree. It's almost as if they were bailed out by the Chinese. Look at their silver inventories since the day those banks showed up there, second week in March, and I think what you are seeing is they needed help in filling delivery requests before they get
Mm.
um, called on the carpet and default because they can't deliver. Um, what does it mean? To see the Shanghai silver inventories bleed down to 700 tons or less is a big deal. What does it mean? And Shanghai, China's not making it. And remember, you can't export gold out of Shanghai, only silver. So is it coincidental? I don't know. You tell me. But I do think you're right. It's getting closer to the point there just isn't the ammunition to be able to handle deliveries. And that's really the difference of everything, man. It's that these exchanges were never meant to deliver, but now the nations that are sophisticated, coordinated, and wealthy enough understand it's the Achilles heel of the Western system. These banks that are the cornerstone of the Western system, JP Morgan, Deutsche Bank, Standard Charter, HSBC, et cetera, Bank of America, they're wicked short. They're wicked short in a naked fashion. And if you stand for delivery the way these institutions are, you blow things up. And so, yeah, it maybe they're trying to sucker the brain dead managed money just one more time into going short as the commercial banks go long. As the price has been dropping, that's when the hedge funds jump in because there's value. Well, if it's being manipulated down to maintain this illusion. So they say, let's jump in. We can make a profit. It's cheap now. And then the commercial banks don't short the rising market, which they normally do to play the rinse, wash, and repeat game. And it just takes off. Yeah, maybe that's what we're doing. It's getting close to that moment because we are entering a period of time where collectively there is an understanding by these big players around the globe that, hey, you want to win, buy it, use the Western suppression as your subsidy, if you will, and stand for delivery. And that standing for delivery is putting some serious pressure on these banks. So yeah, one of these days, what you just said will be right. And it's hard for the naysayers to see that. And that's why most people will never take part in this. You have to get in before it becomes obvious to everyone else that this is a
Mm,
game that is now changing. Let's
yeah.
see if we can see what silver closed at today in Shanghai, 32.67 today. So 32.67, and yet it's not even 29 in the West. So which is the real price? And that keeps going higher and higher, uh, which is incentivizing arbitrage, which will make it much more difficult for anything to stick around here in the Western vaults if traders have the ability to buy it in the West and deliver it in the East. And the CME group created a contract in 2015 that allows for just this, that you can buy in the West or short the markets in the West and stand for delivery in Brinks Hong Kong. And that Brinks Hong Kong facility is a COMEX facility. And that's what they're doing. Where a few weeks ago, we saw the $500 million worth of gold that was delivered to Brinks Hong Kong on this exchange for physical. And then what happens? They were kilo gold bars instead of 100-ounce bars. So that's what the Shanghai metals market trades on, where they then trucked over to Shanghai and used to offload there. It sure seems that way to me. And I think that's exactly what they're doing. They're bleeding down the Western vaults, standing for delivery in other parts of the world in exchange for physical, using the Western suppression to their advantage, where the COMEX is rehypothecated 16 or 1700%, which is peanuts compared to the LBMA. And they continue to play this game that will end poorly because of the coordination of these countries that are standing for delivery. Um, it's interesting too, by the way, that there's an article I just read, and it was published. I forget. It was a Shanghai, not a Shanghai, a Singaporean, I believe, article that talks about this missing 2,700 metric tons of gold in the numbers that the Chinese government is citing for how much gold they imported this year. And everyone talks about they're not buying gold for a month and the price drops. Well, it would be in their best interest to allow that to happen anyway if they're buying. Yet basically what this article said is that the numbers don't add up from what they said was imported to what they're reporting. It's 2,700 metric tons under what. It doesn't add up. What they're saying is they're not reporting all the numbers. Well, duh. And if gold is imported that is not 9995 pure, it's not reported to the IMF. Why would they report anything to the
Mm,
IMF anyway? When you realize they produce 400 to 500 metric tons themselves per year, they don't report it. There are banks like ICBC, which act as a proxy for the PBOC, and they're buying it and not reporting it to the IMF either. They're working with the refineries in South Africa and Switzerland and not reporting it either. So, I mean, the bottom line here is that gold and silver are being remonetized, as are all of the commodities. There was just another report by JP Morgan that says that the Chinese are responsible for mining between 60 and 80% of all the rare earths on the planet, but responsible for refining 100% of it. This green agenda has not been thought out very well, and everything that they're doing is centered around commodities. But to expect them to be transparent in their acquisition and their numbers and what's really going on is foolhardy. I can just simply tell you that there is a global flow of commodities from west to east, and it should not be underestimated. The problem with the system is that the leverage that is found in the system inherently enables them to make people who are even well connected and well read, of course, reading the wrong stuff, make them think that all's well in the world. And why would you ever buy metals that aren't performing the way they're supposed to in this environment? That's exactly what the people who are acquiring it all using this leverage against us want us all to think. So
Yeah.
yeah, I think, before it's all said and done, silver will blow through 30. Silver will go higher than people think possible. Look, Bank of America is saying $3,000 gold by next year.
Yeah.
And okay, so
I
$3,000
made a
gold divide
video.
by 42. Just take 3,000 and divide it by 42, and you get 71. That would be the average price of the last 150 years, price ratio.
Yeah.
Take 3,000, divide it by 7, 428. That would be the geologic footprint right now, 7-to-1 ratio. So there's
Yeah.
a long way to go in silver. I know it's frustrating. I get it. They're good at what they're doing, but this is a high stakes game, a very high stakes game that could bankrupt hedge funds or more relevant, some of the biggest commercial banks on the planet. And
Yeah.
when you hear that they're not doing well in their derivative stress tests, they call it a living will, whatever the hell that means. These commercial banks are already over leveraged and undercapitalized, and all it takes is one bank not able to deliver a default, which busts the whole thing wide open and starts to really rattle if not destroy, some of the biggest banks on the planet. And the systemic nature of it all, what does it do to the whole system? Maybe that's why China gave in and helped out some of these banks with silver probably to be delivered probably to somewhere in the global south. So I guess we'll see how it all plays out, bud. But I think it's just beginning. And don't worry about the price. The price will take
Right.
care of itself. Just use it as a subsidy the way that these countries are doing, using the Western price against us.
Yeah, I mean, why would the most powerful countries, why would all the world's central banks and all of the wealthiest, smartest, richest investors and billionaires, why would they all be buying it if it wasn't worth much? I always say actions speak louder than words, right? People could say this and it's not doing much or you shouldn't, but actions speak louder. What are they doing with it? They're all getting it. And you could say one thing, but and like this, I forget who used to say this, but they used to say your actions are speaking so loudly I can't even hear what you're saying. you know, and I think it's a good point. Is look at anyone who's successful, those powerful countries, banks, they're all buying lots of gold and silver. And that
and
should
and
speak
other
for itself.
commodities too. Like the Chinese bought the LME, the base metals. Um, they're striking deals in all sorts of commodities. He who owns the commodities makes the rules. It always used to
Mm,
be he who has the gold makes the rules.
right.
But as Zoltan Pozar said, this is Bretton Woods 3, all about commodities. And I think it's not just gold and silver, it's base metals, it's food like wheat and soybeans and corn, it's water, it's any commodities, it's rare earths. Commodities are what you need. And I think the world is moving away from opaque debt instruments and promises by an
Mm,
insolvent country that is bankrupt, maybe even morally, at least in terms of our leadership, um, hypocritical, and moving into something that is considered, tangible and has been forever, things that you would need, not promises made by a government. And I think that's a big deal. So yeah, it's not just gold and silver that they're buying, but they're doing the same thing. And when you look at, the comments made by, the chairman of not only the Shanghai Gold Exchange in 2015, where he basically said, when China is allowed to speak at the table, the real price of gold will be discovered. Or the head of this new BRICS grain exchange who says, look, we produce just as much as the West and consume maybe more, and yet all of the prices of these commodities are controlled by the COMEX. That's wrong. And so they understand what's happening. They're using this against us, and you will see at some point the legitimacy of the Moscow exchange, of the Dubai exchange, of the Shanghai exchange, which, by the way, the cumulative volume, the Shanghai Metals and Futures Exchange has gone up over the last 75 days, 200%, surpassing the COMEX. It's now the number 2 in the world behind the LBMA in terms of trade volume. And so this is something to not underestimate. It's growing, and they're doing it methodically and slowly, and making it very difficult for the West to push back. And the funny thing about it is that, guys like you and I and all of your listeners understand this, but the people around us, even those who are wealthy and sophisticated, supposedly, and well read, they have no idea what's coming. And they will go down with the dollar ship instead of being prepared, at least with the portion of their assets outside the dollar in farmland, in gold and silver, in agricultural ETFs if you can't buy farmland, in oil and gas, and in things that are opposite the dollar. Precious metals probably being number one because of the lack of counterparty risk. You hold it yourself. But these are the things that the biggest money in the world who understands the playbook are clearly doing. And this is why so few people really succeed in investing, and why the big money always is ahead of the curve, because they know the playbook. Big money is also the money that has the greatest amount of information, and they know what's going on, and they know what's happening, and they know what's coming, and so they're preparing when the rest of the world thinks they're insane, or if they knew. Thing is that the rest of the world doesn't even know what they're doing because we don't talk about it in the West. Most of the news stations that I read, or the information I read, is from websites all around the world, in Russia, in China, in the Middle East, in Europe, in places that are portraying a greater amount of validity and truth. And by the time you read it in Zero Hedge, even, or in some of these other news outlets, it's long since an old story. So um, keep doing what you're doing, man. You're providing the world with a real service. Those who actually listen, um, I know that you're for real. That's why I like you, and you're not fake. You understand silver for what it is. Yes, you can make a lot of money, but it's wealth. And it's wealth that has no counterparty risk. It's wealth that is undervalued, hasn't been allowed to show price discovery, and is massively needed and being accumulated. And if it weren't for the concentrated short position of some very large banks, or the LBMA that trades 3.5 times global mine supply per day, yet they only have 300 million ounces supposedly able to trade with, something is wrong. And I think what we need to see is the end of these naked shorts, the end of naked shorting, because it destroys price discovery. And it's not fair. It's not fair to the producers, to the miners. It's not fair to anyone, and including the investors. And all it is doing is giving an unfair advantage, really a monopoly, if you will, to print money by the elite, the commercial banks. And they're now being beat at their own game by all of these sovereign nations who say, good, you play your games, that makes it better for us to accumulate it, but by the way, we're going to stand for delivery. And that's what's breaking the system. No one ever did that before, which gave them the ability to keep the game in play. But when you pull all the pieces off the board and deliver them to another part of the world, you're running out of pieces to play the game with. And that's, I think, really the takeaway from what I see right now.
Can I share something with you real quick?
Sure.
I Let me know if you hear the audio now. I think I figured out the audio problem from this Alex Jones clip.
Are trading hundreds and hundreds and hundreds of times.
Can you hear that?
Yep.
Okay, check this out. This is the Alex Jones clip from a while ago.
Are trading hundreds and hundreds and hundreds of times. Usually it's about 200 times the amount of paper silver that there actually is real silver in the world, and they use that to manipulate the price and hold it down anytime it starts going up, because then they can dump limited amounts of their paper silver, and it creates the illusion that silver actually doesn't have value, when really silver is hundreds of times more valued than what it really is. You understand? It's a real, tangible commodity that's used in construction, that's used in electronics, that's used in microchips. It's been valued for over 6,000 years. Same thing with gold. So Max Kaiser came on my show 10 years ago, 5 years ago, 2 years ago. I'm gonna try to get him on next week, and he hammered the point that if people simply start demanding physical delivery of silver in the market with their trades, that it will bankrupt JP Morgan, Goldman Sachs. All of them will go down, because the amount that they're leveraged against silver is, again, hundreds and hundreds of times bigger conservatively what GameStop is.
He's dead serious right. That's what we're
Yep.
saying. That's what's happening. And it's not just the people. It's funny. You look at what not Jeffrey Christian, the guy, what's his
I
name?
don't
Jeffrey
like that
Curry.
guy.
Jeffrey
Very.
Curry, he used to be the head of commodity trading globally for Goldman Sachs, where he came out and said the public can never do that because the public buys ETFs and the ETFs are the shorts. He said the ETFs buy that gold and turn around and sell it to the market to hedge their position like any corporate would. That's about as full of shit as I've ever heard. A company like mine would hedge their inventory because you buy silver in your inventory that you're planning on selling. You have to hedge the downside risk. So you take the opposite side. So as one goes up, the other goes down, you're market neutral. But you would never hedge metal that you're holding for speculation. In other words, if you're accumulating metal on behalf of someone else to holding it to safeguard it as a custodian, that being the ETFs, to safeguard its integrity, you're speculating. And if you hedge it, then you never speculate. The price never moves. So you don't hedge anything. What he basically did is it was a faux pas where he admitted that things like SLV are being used to suppress the paper price. And that's the key here. And he kind of stepped on his own dick. Sorry for saying that. I apologize. Hope that doesn't get you in trouble, but that's what he did. He did that as a faux pas. Like, oops, you shouldn't have probably said that, because if any ETFs like BlackRock and JP Morgan as the custodian of SLV were indeed taking in all of this metal, they are naked shorting their clients' metal, which is illegal. And they're doing it to keep the price down. So this is what's been happening on many levels. This is why I think SLV and GLD are some of the worst products ever created. And when you got Jeffrey Curry, who admits that, Goldman Sachs, I'm sure, was one of the custodians of this. And if they indeed take in all this silver and then short it right into the market, keep the price from rising, you've just given them a whole funnel of money that they don't even have to pay for to suppress the paper price. And then he says that. Well, keep in mind that that doesn't happen. And if it does, it's illegal. And there would never be a reason to hedge ETF holdings because it's a speculation. It would never go higher. You only hedge inventory if you're a dealer like mine, because you spend $50 million on inventory. If you don't hedge it, it can become 30 like that. Maybe it becomes 70. You want to take that risk? And if you do, you don't stay in business very long, especially in this market. So it just goes to show more of the same thing. And what Alex said there is spot on. It's what
Yeah.
we've been saying all day here. It's one thing for the people to do it, stand for delivery. It's another thing for sovereign nations to do it, where, India can import 700 million ounces in 3 years. It's a whole different ball of wax, a whole different. And that's why I say you can only suppress a market or manipulate it for over an extended period of time by pushing the direction it's going. And if you try to manipulate it when you have sovereign nations standing for delivery, you get rolled over. Was that why the banks showed up in Shanghai? Seems that way to me. What Alex said is prophetic and right, and I could not agree more. Period. I could not.
Yeah. Wow. All right. Well, we could wrap this episode up here. I really enjoyed it. We talked about a lot of stuff this episode, so
Always.
yeah. So yeah, I'll see you soon. Folks, make sure you subscribe and like the video if you enjoyed it. Click the bell so you get notified when I post. We also do this on a weekly basis, so stick around. I have a whole playlist of our past 31 episodes you guys can check out as well. So yeah,
We'll do this on July 3rd next week,
okay.
the day before the
That
July 4th holiday. And
yeah,
I'll look forward to picking up where we left off. It ought to
that
be
will
interesting, the debate tomorrow night. Um, Maybe there's even something to talk about after. If so, let's
right.
jump on. But I appreciate you, man, and all your listeners. So thanks for having me, and look forward to doing it again real soon, bud.
Yeah. All right. Peace out.